Welcome back. I hope you're having a fantastic day. It's February 22nd of 2022. It is 2/22/2022. So interesting date today. And we're going to take a quick look at the markets and see what's going on. We are still in uncharted territory, the land of uncertainty. All eyes are still on the Russia-Ukraine situation. So until we see how that situation escalates, de-escalates, or completely goes away, hopefully, with diplomatic negotiation, the markets are going to continue to take risk off the table. So we talked about risk yesterday. What does that mean? Preservation of capital. Whenever you're investing, whenever you're making a move, you always think first, preservation of capital. You want to manage the risk. You want to know what is your downside so you can calculate risk reward, and always be on the lookout for how can you be wrong? How are you wrong? Where can you go wrong? What's the downside, and what is the cost of that downside if it happens? Upside is great, but number one, you've worked hard for your capital. You want to preserve your capital. The difference between sophisticated investors and retail investors is sophisticated investors, number one, don't lose money, preservation of capital. What's the worst that could happen if I'm wrong? How can I be wrong? Retail investors, beginning investors, amateur investors, all they look at is the upside. They do not calculate risk. They do not take into account risk, and they do not hedge their bets for the downside case. And as Mark Twain said so brilliantly, it's not what you don't know that cost you the most. It's what you think you know to be true that just ain't so. Something like that. So anyways, great quote by Mark Twain. Futures last night took a hit when the announcement was made that Russia has moved into Ukraine. Not much has escalated that I know of yet as of 12:42 Eastern Standard Time on Tuesday, the 22nd of 2022. But currently the markets are down 1% to 1.25% across the board. And if you see, generally when the markets are down in the mornings, you'll see them balance out in the afternoon. And like I say, you want to watch the momentum in the close. Are you buying or selling into the close? Is the market going up or down into the close? Usually it'll come back in the afternoon and then sell off towards the close. We're down in the afternoon. The momentum kind of increased on the selling side as we got into the afternoon. So it could potentially accelerate into the close. If you see that, again, that's investors continuing to take risk off the table, anticipating escalation or further escalation of the situation in Ukraine. So a lot of this is baked into the algorithms. When the futures opened last night, markets took a big dip because algorithms had it plugged in. If Russia goes in, sell. So that's what happens. And then retail gets involved when markets open in the morning. It can be escalated. Mornings are always a tricky time to make any moves. So that's kind of what is going on. And until we understand and get further guidance, really everything else, all bets are off the table. Nothing else really matters at this point. It's the that situation that investors have their eyes on, and the big investors and market makers are who control the markets, right? There are buyers and sellers, and market makers in between filling those orders. So until we get some clarity and we know what's going on there, we're going to continue to chop around. Markets will be up and down. But, you know, I've been around for a while in the markets. Let's take a look at Bitcoin here and the trends that we've been watching, and we'll get into potential risks and downside risks and things, and some thoughts on, you know, how to think about these things moving forward and what's the worst case scenario. So this is our major macro bottom trend line here, the do not cross line in the sand that Bitcoin's kind of inching its way down. This is our recent downtrend here since November, about the 9th of November, 2021. It's been downhill ever since. Bitcoin's been marching down under this trend line, tested it right there in the middle, bounced, broke the trend line, came back, and now has bounced perfectly off the trend line. So the question is, what is going to happen from here? Is Bitcoin going to you know, do something like this and kind of continue its way up into that retracement that we've been looking for before it rolls over into a longer, more sustained bear market? Or is it going to continue to bounce along this trend line until it hits here? And then we get the ultimate test right here. Is it going to break down into further capitulation? And that's where you'll see a capitulation event. If Bitcoin breaks this macro trend line, 29,000 over here, 33,000 wick. These are the wick lows of the previous June, July bottom, the wick low of the previous bottom that was put in on January 22nd. The closing was 36K, it wicked low to 33. If that trend line gets broken, you could potentially see a capitulation event there, or it could bounce and then continue its jaunt onward and upward into a retrace from that point. So we won't know till we get there, but that's a good line to watch in terms of what is Bitcoin going to do. If it breaks that line, it could be a capitulation event. And what does capitulation look like? It looks like this right here. So this was a 1, 2, 3, 4 days just straight down, versus what you see over here is a couple of days straight down. That's not capitulation. This is capitulation. What that means is investors giving up and just bailing out, going straight to cash, which is not a bad place to be when markets are in turmoil like this. Cash is always a good place to be so you can take advantage of opportunities. This was capitulation here, March of 2020. We saw a big downward candle of that initial drop was 40% in one day. That prices went down, stock market did kind of the same thing. That's capitulation. So you could potentially see something like that if Bitcoin does break that level. That is a major market structure level that there's a lot of support. There's a lot of buy orders. A lot of people would be in at that point. The thing to watch out for is the Bitcoin hash rate is at all-time highs. I believe the break even, or the cost to produce a Bitcoin for a miner, is around 35,000 right now. So they're just barely above the break even level right now in terms of what it costs. And it could be, with cost of capital and things like that, could potentially be even higher than 35,000. That could just be the raw cost of energy and equipment and things like that. When you take into account overhead and cost of capital and things like that, it can be much higher. So if it gets much lower for a sustained period of time, miners will have to sell to cover expenses. They only have so much in holdings. They only have so much cash on balance. And as the hash rate goes higher, which is, it's at an all-time high right now, it means the mining difficulty is different. As more people enter the mining space, it means the rewards that are the same, that never change, they get cut in half every 4 years, get distributed amongst the new players in the game, which ultimately drives profitability down, competition up. It gets more expensive and more difficult as the hash rate goes up. The rewards are more expensive, more difficult to achieve. So that will drive the cost up for miners. Let's take a look at traditional markets here for a second. And they are at major market support levels as well. This is the Dow. The Dow Jones it put these wick lows in, but it's already broken below its closing low. So we are on major market structural support. The NASDAQ has broken below its previous closing low and taken that low out, and the S&P has as well. It hasn't taken the wick lows out, but it's taken the closed lows out. So right now, these markets are probably all in bear market territory. The S&P is down now 10%. Traditional markets typically define a bear market as 20% down. So they're not quite there yet, but they're definitely in that trend because they've taken out that 17% on the NASDAQ. They've taken out previous lows, and the Dow is down 10%. So still not too bad considering everything that's going on. And one of the things to remember is the Fed still hasn't done anything yet. They haven't stopped buying bonds. They haven't stopped their quantitative easing. They have not raised interest rates. So the Fed really hasn't done anything yet. So a lot of this was in preparation of the Fed making a move with the Russia-Ukraine situation. Depending on that and the escalation, the Fed may come out a little bit more hesitant to take action right now until the geopolitical climate settles. So there may be somewhat of a reprieve there. And that's kind of why markets, number one, haven't tanked quite as much, because the uncertainty about what the Fed's going to do, thinking the Fed might come out a little bit more dovish right now, kind of prop the markets up. The Fed is the anchor of the market. So in that regard, let's talk about, I mentioned the other day, the first time that I entered the stock market, I primarily was investing in real estate and businesses and things like that as an entrepreneur, and never really made a move on stocks until the bottom of March of 2009. So this was the great financial crisis. I was heavy in real estate at the time and never did anything in the markets, kind of followed them. The Dow was around 14,000 at the time, and it dropped basically 50 something percent, that the market dropped during that time period from October of 2007 until March of 2009. So it took a little bit of time for the market to make this move. And this is how markets work. Like, a lot of people think it's instant. You can get some big capitulation moves that are instant. But all in all, it takes markets a little while to bottom when they're in a big downtrend like this. So this is where I jumped in, right at the bottom of March of 2009. I'm an opportunistic investor. I invest in companies, real estate, stocks, cryptocurrencies, and this is what attracted me to the crypto market. And I'll get to that in a minute. There's a lot of fear going on here. A lot of people thinking the world's coming to an end, especially March 2008 and 9, when banks are failing everywhere. But I looked at what some of the most successful investors in the world were doing. Warren Buffett was making big moves back then. Sam Zell was making big moves back then. A lot of big, billionaire investor traders were making big moves back at that time. So I was kind of watching what they were doing. And I followed T. Boone Pickens was around back then. He was making some big moves. So I just kind of followed Paul Tudor Jones, followed those guys, Ray Dalio, all the hedge funds. I kind of watched what they were doing and followed them. You have to excuse me. I still have a little bit of a cold going on here. Have to take a sip of some water here and there. But feeling much better than yesterday. So I watched what they were doing, and they were all jumping in right at this point here. They got out up in this area and they jumped back in here. So I had fairly good confidence that with that type of investor in the market, that we were going to rebound. Now, it took a little while. This was March 2009, and it wasn't until, where did we get back? Right around in this area of April of 2013. So it took 4 years for the market to get back to where it was before the collapse. And of course, it took the Fed getting involved, propping markets up. There was a lot of things going on there. That's where QE was born. Also, Bitcoin was born out of this, right? So wish I'd have known about Bitcoin back then. Could have put $100 in back here, and boy, that would be worth a lot, wouldn't it? So that was March of about 2013, before the market got back to where it was before it started the multi-year bear market that we've been in, the super cycle that we've been in for stocks. So let's fast forward. And I made some investments in and out along the way to the next time I made a move in the markets. Again, right here in March of 2020. So I guess you could call me a bottom dweller or a bottom feeder. I look for bottoms. I look for times when big events happen. This one was a much quicker capitulation event. This started basically in February of 2020, 21st of February, and the bottom happened by the 23rd of March. So that was about a 30-day drop. It looks like it's overnight, but again, even that took a month for markets to drop. Basically, what did we see there? 37%. So the Fed jumped in a big way here at 37% versus last time it was a 50% line in the sand where the Fed jumped in to prop markets up. And the reason they did it here was because this is where the pandemic obviously hit. And we were going in lockdown and quarantine, businesses were shutting down. So they had to do something in order to keep the market stabilized and keep, a complete collapse from happening. Had they have not jumped in, there's just no telling what would have happened. So this is where on the way down, when this was happening, we were getting those 1,000-point days and circuit breakers were getting triggered in the markets. We'll take a look at the NASDAQ. NASDAQ was kind of the same thing. I don't think NASDAQ was down quite as much. Let's take a look. NASDAQ dropped 30%. So the NASDAQ didn't take as big a hit at that point. But the circuit breakers were getting triggered, things like that. So I was looking for the opportunities. And this is where I was watching crypto. So let's take a look at Bitcoin and see what Bitcoin was doing during these times. And I first heard about Bitcoin 2015, 2016. Let's take it off log scale here so it looks a little bit better. And I kind of watched the markets and watched what was happening. First heard the word Bitcoin back then, 2015, 2016. It wasn't doing a whole lot. So it wasn't really explained to me in a way that I could understand the value proposition and what it was all about and what it was designed to do. At that point, it was described as just basically, hey, I put money in and it turned into a bunch of money and I watched it go up and down. And then I watched the move leading up to the 2017 2018 blow off top, that December 2017 event. And I was watching Bitcoin go. I was watching it back here, around $1,000, somewhere around there. And I watched it go up and down from 1,000 back down to 500 or whatever. And I was just like, not interested in that, in an asset that couldn't sustain itself in any kind of a direction. And then I watched it hit 20,000, and that started to get my attention. And then I saw it drop instantly. And, again, lost interest and watched it bounce up and down, and just kind of watched this whole downhill slide. Wasn't really interested, but it was all over the news. So I was keeping an eye on it, just kind of watching what was happening. And again, saw it down here in this $3,000 level, thought about jumping in, watched it jump up to 13,000 again, and then ultimately watched it drop back down to about 6,500 here before another bounce. And then bam, the March 2020 event happened. And that was a drop of about 61% in Bitcoin over from February 15th to 16th of March. So a month that it took Bitcoin to drop. And that's where I jumped in, was right in here, right around 35. What was it? Or no, $5,000. I'm sorry. What I was looking at was the bottom over here at 3,500, 3,000. So I was pretty confident here that looking at this at, $4,000 or $5,000, that it wasn't going to go below 3,000, because that's kind of where it bottomed last time. And it had bottomed there, or it was in that area before the big run. It came back down, settled in that area. And again, that's where I talk about support and resistance, breaking markets down, keeping it simple. You can use all kinds of indicators, all kinds of averages, things like that. And daily moving averages are pretty important. And we looked at those. But at the end of the day, it's about support and resistance. Markets tend to retrace. Price will tend to retrace when you go through a major bull market, not just crypto, but stocks and everything. They have a tendency to go up and go down. And if you look at, we'll look at, the NASDAQ in a second, back in 2000 .com bubble. But this move fully retraced, and it didn't take very long for it to recover about, 2/3 of that move. And so I was pretty sure that it wasn't going to go below $3,000. So I felt pretty safe in this area. And of course, I sold along the way, had no idea that would reach, $60,000. That just didn't seem feasible to me at the time. So I was expecting it fully to get back to 20,000, and I was happy with that. And, it obviously blew way past that. We had the Fed involved, a lot of money coming into the space, a lot of people jumping into the space, which is what happens, right? So price goes up. Retail gets involved. There's a lot of FOMO. Price moves up to the top. Whales and institutions bail out. Price starts dropping. Everybody panics, and you get off into that bear market consolidation for another pump. Do it again. And it was on its way up here before the March 2020 bottom. I think the bull market was back after this consolidation phase on its run again. And then the Fed and everything just gave serious ammunition to this bull run here. And same thing happens. Market goes up, hits this, euphoric top at 40,000. People bail out, take profits, then gets propped up again. And that happens 2 or 3 times till the market just runs out of steam, runs out of buyers. There's just not enough retail buyers here in the 60s. A lot of people did get in the market back here. 70% of the people that have entered crypto entered in the last year. A lot of them entered at this May top and ended up getting burned. And a lot of them bailed out along the way. And there's still people that are still holding from back in this area. And then a lot of people got back in when it was on its way to the 60,000 level, because again, a lot of people in the space were saying 100,000 was incoming. So that's kind of how these market cycles work. But again, what I always look at is, from a risk assessment standpoint, what's the worst case scenario? So where's the worst case, absolute worst case market meltdown conditions for Bitcoin in the most recent history? And there was a wick low at 3950 right here. And I was watching it to see if it would go back to that $3,000 level that it hit prior. And, so it was $3,000 in 2019. Or when was that bottom right there? That was, 2019, $3,000. And then we had $3,900 in 2020. So I was fairly confident, and am fairly confident, that in the worst market conditions, it won't go below that. That's about as low as it's going to go, if it ever even got that low. And then in this recent cycle, we've seen $30,000 hold. And this was a big area of contention where that level was tested multiple times. And then we had the bounce. We rolled over the top, been in a downtrend ever since. And what we're looking for, obviously, is that retrace, kind of like right here. two schools of thought. A lot of people have mentioned blockchain backer, and his theory is we're going to get this retrace to the 618, maybe 702 level. So that's one thesis that's out there that I've been following. I like blockchain backer. I watch his stuff. I've seen people mention his name in the comments, and I think he's very sharp and obviously knows his stuff, has been following the markets a long time, and he's been pretty accurate. So the question is, and one of the things I've been questioning is, was this the retrace? And this was just an irregular correction, and it just, the market makers and whales and large holders got in and kind of manipulated another run for distribution, and we're still kind of in that distributive markdown phase. And was that going to be the retrace and then roll over into more consolidation? But there was a lot of excitement, a lot of retail got sucked back in thinking we're going to go back to 100,000 again. So, and a lot of altcoins ran during this time. So a lot of altcoins have hit all-time highs. The total altcoin market, we looked at that the other day. This is total 2. This is after that move. It ran, to its 4236 extension, and it's been downhill ever since. So part of me thinks that we've potentially seen the major altcoin cycle for this cycle that we're in right here, or at least this range that we're in right now, before we have to roll into a more consolidation phase to get off to the next run, which is somewhat about what this is, right? So the question is, what's that phase going to look like? Are we going to have that retrace and then bounce? Are we going to have a retrace and roll over and continue into a longer term consolidation? So blockchain backer is looking at the past, which is all we have. All we have is past performance of Bitcoin. Bitcoin's always made the retrace, but it made it here. And this was the top, not this. 69 wasn't, that was obviously the next high, but everything indicates that the market cycle top was at 64. So if this was the retrace and this kind of encompassed it, altcoins did run, and there's still a few that'll run here and there, but the bulk of them ran here, and a lot of them are down now 70, 80%, which is what happens. So you see Solana ran, Matic ran. Let's look at Cardano. Cardano went on. What's going on here? Let me return this chart back here. There's Matic right there. So you see this consolidation phase, Matic has run, and it's now retracing that move. The question is, where are these bottoms going to be now? So Cardano's right there now at the edge of the cliff, retracing that entire move. Solana right there at the edge of its cliff, retracing the entire move. So one indication will be, a lot of these are only down about 70% right now. I say only, but if it gets back down to where it started, where they started before the run, that's where you're talking about 90%. Typically that's what happens, right? Altcoins will lose 80, 90% of their value. And again, this is all based on market history, pre-cycle history, everything that's happened before. And that's blockchain backers thesis is, Bitcoin has done this 3 times now in all previous cycles. You had your peak, drops, retraces, 618, goes on to more of a capitulative bottom, bounces back again and just kind of works its way down into a longer term bear market, had one final capitulation, bottom, consolidation, accumulation phase, and then started to make its run, ran into some resistance, sold off again a little bit. And the resistance is you just trying to get retail involved, and retail has just seen, man, we hit 20,000, like me, drop down to 3,000. I don't want any part of that. So I was one of the people observing this. So this move here didn't convince me to jump in. And that's the audience, that's the market that's looking at these things. And then when you see something like this, you're like, wow, this is time to get in. And this is that consolidation phase where the money's made. So anyways, if you go back to 2013, 2014, same thing, big, run up, a lot of FOMO, drops, retraces. And, let's just look at that. Fibonacci retracement. So 618, 702, just like he's talking about. So Bitcoin has just done this, then it bounces again, has one more little retracement from the bottom, and then rolls over to that longer bear market cycle and just repeats again. Why? Because it was mostly retail driven, less institutional investors, less corporate investors, and just a lot less capital in the space. You're talking about an asset that was a fraction of a market cap of where it's at now. Bitcoin got up to almost $1 trillion or over $1 trillion at one point. Market cap now is around 700-800 billion. I don't know where it's at today, right this second, but somewhere around there. And very different asset now at this $30,000 level than it was at $3,000, or that it was at $700 or $800 than it was at $200. So it's a whole different animal to go from 100 or 200 to 13,000 or 14,000 than it is to go from 1,000 to 20,000. And now from 5,000 to 60,000. And now we're down to this 30,000 level. So very different market, very different price level, very different market cap, and very different participants. So my thinking is, I don't, and I could be totally wrong, but this is just what I'm looking at, and this is what I'm thinking. If Bitcoin holds here, then my thesis is we're not going to see those real big long-term bear markets, all things considered, all things equal, just because of the level of the players that are in the space now and the investors in the space now that that are heavily invested at this level. Now, they're not going to keep it propped up. If price looks like it's going to break, a lot of these investors will cash out and they'll wait for the bottom and they'll buy back in. The more sophisticated investors, they're not going to ride this thing down. So your institutional investors, your corporations, your hedge funds, people like that, even a Michael Saylor who's borrowed money, he may have a loan covenant that requires him to sell if price breaks below a certain level for a certain period of time, and he may have to sell. He may not have any choice, but they can always buy back in later. And he certainly won't be able to borrow money to keep buying like he was before. Well, the Fed hasn't changed anything yet, but once QT enters the game and interest rates rise, all that's going to get a lot more difficult, a lot more expensive. But in any event, if Bitcoin holds, my thesis is that the new major market cycle bottom is going to be that $30,000 level. It'll bounce around there for a while. That'll be your accumulation phase, kind of like this was here, to make another run back at this high. Now, again, that's with just, general market conditions, no major conflict, no major war, anything like that kind of messing things up, messing markets up, no events in the stock market, just general market cycle conditions. Of course, if we get a black swan, and a black swan is not a war that we know that's coming. A black swan is another pandemic event that pops up, or, some major market banking crisis we don't know about that just pops up and tanks the markets, like what happened in 2008-9. Those are black swans. Everything that's happening now are known quantities. The market's kind of pricing those in, de-risking, and processing escalation as it goes. If we see escalation, markets will dip again. If things settle off, markets will pick back up. If the Fed comes out hawkish, markets will, tank a little bit, then they'll start bouncing back. If they come out dovish, markets will bounce. So that's my general thesis in terms of where we're at and what to watch out for. And there's a lot of people telling you what to do, telling you not to sell, telling you, this is your last chance to get Bitcoin before it goes off to all-time highs. Well, you got to be careful, because a lot of people were saying, $100,000 is definite, 200,000, 250, 500, $1 million. Kathy Wood said $500,000 Bitcoin was coming. So what's interesting is the people that will tell you it will definitely hit 100,000 or it's definitely going to hit 250,000 are the same people that were telling you it definitely won't go below 40,000. Well, some were saying it definitely won't go below 50 ever again. And you were being told 50, this is your last chance to jump in before 100 or 500 or a million. Same thing at 40. Now you're hearing the same thing at 30. And I'm not saying it will never go below 30. I'm just saying that's a very strong level of support, a lot of buyers, things like that. So when it comes to what do you do in terms of being long-term holder, short-term holder, things like that, how do you make decisions? Do you dollar cost average on the way down? Do you buy the dip and things like that? And, or do you sell or do you hold? And, you have to make your own decision. Nobody knows your financial situation, your position, your needs, things like that. So you just have to take in consideration where the market is, where it's been, what your needs are, and make your own decisions in terms of how to play the market. And then from a trading standpoint, if you're swing or day trading, you sell the tops, you buy the bottoms. So you sell the rips, you buy the dips, sell the rip, buy the dip. So you kind of do that, and you get out here and you buy back in, get out here, buy back in, get out here. That's what traders do. As far as a long-term holder, that's where your dollar cost averaging comes in and your buy the dip comes in. So price peaks, drops, you buy more, peaks, drops, you buy more, and you're holding, you're not selling. You can sell, but generally that's when the buy the dip mentality comes in, because when you're in a downtrend like this and there's a lot of market uncertainty and things like that, ultimately you don't know for sure 100% where this price is going to go. There are headwinds. Well, you don't know how long. That's the thing is, you can be fairly certain and comfortable that if price hits $9,000, it's probably going to test that again at some point, maybe. But this all happened in a very accommodative environment from a Fed policy, interest rate policy, things like that, which arguably are supposed to get more difficult as more people enter Bitcoin mining space. That gets more expensive and difficult. So the miners may start selling and kind of keep price at a certain level. They haven't done it yet, and that's not a thing yet, but it's something to just watch. So so what I'm saying is there's no certainties, there's no guarantees. Nobody can tell you 100% for sure, for certain that price is going to hit 100K or when. Nobody can tell you 100% for sure, for certain that price will hold 30K or when. So you just need to be prepared for all that. And you just have to make your own decisions. Nobody can make those for you, and just qualify where you're getting your information and what you're hearing. If somebody is guaranteeing you absolutely 100% price is going to do X, we don't know that. And it's a whole different thing for Bitcoin to go from $35,000, $37,000, $30,000 to 100 to 200 to 500 than it was for Bitcoin to go from $600, $500 to 20,000. That's a huge different ball game, different level and amount of capital that needs to come into the space for that to happen. So you just need to think about those things, take them into consideration. I'm not saying it can't. I'm not saying it won't. I'm just saying that sophisticated investors, institutional investors, are not buying Bitcoin at $100,000 when it couldn't get over 60 and sustain for any length of time. They want to buy down here, and they want to get up here and distribute and do it over again. So this is obviously a range now that has been created. We talk about cycles, ranges, and trends. And the cycles are the 4-year cycles that have typically been geared around the halvings because of the miners selling at peaks and the retail narrative of buy Bitcoin now because there's only going to be half as much available. Well, Bitcoin is very liquid. There's no supply shock yet. So we'll just have to wait and see till we get there. So what you can look at right now, and you can draw these lines, and we've seen these lines drawn by multiple people that are tracking these channels now. Gareth Soloway was on my channel, and he revealed this, I think, for the first time. And then you started to see it pop up everywhere, this little channel here, and the range that Bitcoin, this isn't perfect, but the tops to the bottoms, that's a parallel channel. When you use the parallel channel tool, I just use the lines that Bitcoin is trading in and could potentially trade in for the foreseeable future, working its way up to the top of the lines and working its way back down to the bottom, working its way back up to the top. And as this cycle continues and this trend continues, obviously, let's put this on log so we can look at it a little bit differently here. As that cycle and trend continues, then, price continues to rise. So that is a market that we could conceivably be in now that would be more representative. And this will narrow as that continues and this asset continues to mature and the market becomes more sophisticated, more efficient. You could see price kind of compress and work its way on upwards like that at a more slower, deliberate pace. And that can be more in line of what we're seeing versus these really super high blow off peaks and these really super low bottom capitulation events. So that's just something that I'm looking at and watching that could potentially be a distinct possibility as we go, if we extend these lines out and kind of see what something like that could look like as time goes on. And these markets kind of continue to mature and these trends kind of consolidate over time here. And so this is kind of my thesis in terms of what I'm thinking and how Bitcoin evolves as an asset over time, all things being equal, as it carves its niche in the marketplace out as a store of value, which is kind of what it's evolving to from a strictly risk on type of speculative asset to more of a store of value kind of asset. I could see something like that happening. And if you look at that kind of time frame, that takes you out into it's a year, a couple of years from now, 2-3 years, as price kind of works its way up and continues. Now, this is just a thesis that I have. So we'll just have to see how this all plays out. And then you can have these kind of, situations and events where price rolls over, retraces, and does these different things along the way. As far as the altcoins go, like we said, right now, very dangerous time to be speculating in the altcoin market, just because a lot of them have already made all-time highs. We're in a downtrend. There's a lot of headwinds out there and uncertainty. And you just have to be careful, because a lot of these altcoins just won't be here if there's a major bear market, and a lot of them retrace back down to that 90% bottom of where they came from. Some of the better ones will be here longer term, but some of the ones that are not good projects will not be here long term. So these are the things that I am looking at. I hope this helps you. I hope you have a fantastic day, and I will see you on the next video.